Hello, this is Abhinav, and in this video, I am sharing some points with respect to UAE real estate investment by returning NRIs from US. So, some points, some thought pointers for you to consider before making that investment. So, now, the case in point is that the person is a non-US citizen or a resident as per the US estate law, estate tax law, and he or she is returning from US, and such persons having the US investments, they face a risk of anything above 60,000 USD faces an estate tax of 18 to 40% on their investments, right? So that's a big risk. And now there are various strategies. I've covered estate tax in a separate video and estate tax strategies for returning NRIs in a separate video. So you can check that to get a detailed understanding of what are the US estate tax implications for NRIs returning from US on their US investments, right? So now how to mitigate that estate tax is to move the money from US to different jurisdictions. Like one of the jurisdiction is Ireland, and some people, they prefer moving their investments, their stocks, ETF investments, to island-based, island domiciled ETFs, right? Like Vanguard has a presence in Ireland. Similarly, there are other jurisdictions, like one jurisdiction is UAE, then there is a jurisdiction, Singapore is a good jurisdiction. So uh, now, when I was making this video, my aim was to kind of uh, discuss specifically on the UAE real estate, because UAE real estate is like sold, pushed by whatever, like the real estate developers and all, as giving a lot of good rental yields and everything. So, but then my larger question is, and as I made this video, the larger question is, can UAE be a domicile of choice for people who are returning from US and who do not want to bring entire money to India? Right, so it's totally understandable. You don't want to bring your entire savings to India, because India has certain restrictions on then sending money back to the US. Suppose you have certain financial goals, like children's education, or you may later on may want to move back outside India. So if you have any such requirements, India has certain restrictions under FEMA. Plus, the Indian government's kind of flip flop policies on taxation for NRIs, for residents, and it's a mess, right? So you don't want to bring entire funds, which is understandable. So can UAE be a domicile of choice in such cases? That's the bigger question, and it is not fully addressed in this video, because in this video I'll be covering on the UAE real estate, but you'll gain certain pointers for this bigger question as well. And I'll be addressing this bigger question in my future videos as I do more research on the financial options in UAE and other jurisdictions as well, right? So now, disclaimer, I'm not a UAE financial or real estate expert. I'm not an investment advisor. This is only some thought pointers for you for further research, right? You'll not get all the answers in this video. You'll have to do your research, but at least if we know what points we have to do research on, that itself is helpful, right? So that's the aim of this video. Now, I'm yet to research on the financial investment options in DIFC. I've tried to do some research, but the information is not very clearly available. But I need to dig deep and do that research. DIFC, ADGM are like the financial free zones in UAE. So I would want to do that research on financial investment options, right? I always prefer, rather than real estate, investing in financial options. Even for real estate, you have an option to invest in REITs if you want to take an exposure. So I'm yet to do that research, and once that is done, I will post the video on that. So in this video, the focus is on the real UAE real estate only, right? Okay, now pros of UAE as a jurisdiction. Now, no personal tax or no wealth tax, right? That's a big plus. Now, this, please understand, can change. Now, UAE earlier did not have a corporate tax also, but later on, due to the pressure of OECD and such bodies, they had to bring a corporate tax of 9%. And there is also, maybe it has been introduced, I don't track corporate taxation, but raised to 15% for some large multinationals, right? This currently, this is a very big plus of UAE as a jurisdiction, but how long it will be there? If it gets changed, that risk is always there. Now, highly stable and diversified economy. Previously, they were fully dependent on oil, but they have really diversified themselves in many other areas, especially in banking and finance. So, and highly stable jurisdiction, geopolitically also, no such political or other kind of risks, well capitalized banking system. Their currency is pegged against USD, so that there's no risk that the currency will fluctuate very wildly against the USD. So if you prefer to keep your funds in the US, and if you think that USD is the currency of choice for the next 20-30 years, strong currency it will remain, then AED is pegged against the USD. So that's a big advantage. Ability to get 10-year golden visa. I'm not very conversant as of this time with respect to the golden visa finer terms and conditions. Maybe I'll make a video on that. But yes, if you make a certain investment, I think about 2 million USD in UAE, you get the ability to get a golden visa, whereby you get uh, ability to reside, stay in UAE. So that ability is there. UAE offers that option. 100% foreign ownership is allowed, so that's a big plus. But again, that is in designated free zones only, not everywhere, but that option is there. Now there are the free zones that the DIFC and EDGM, they are, so UAE is basically governed under the Sharia law, right? So but these zones, to promote investment, they have made it common law governed, right, which is again a big plus. Then allowance, UAE allows foundation type structures, right? So you HNIs can have foundation set up in UAE from an estate planning perspective. So that structure is per se allowed. I'm yet to do research on the foundation structures in UAE and how they interplay with the Indian tax and FEMA laws and the US laws, because US has certain requirements of taxation and reporting with respect to any non-US corporate structures, and there are certain inversion rules. So I'm yet to research on that, but UAE allows those structures from an estate planning perspective also. Then ease of doing business, right? Compare ease of doing business in UAE, again, for someone who is doing business with respect to India, and there is a sea change, right? And in India, you can, I've also recently shared on my LinkedIn the pain of GST and the corruption and the harassment that one faces in GST in India, for someone who is doing business vis-a-vis the ease of doing business you have in such jurisdictions. I forgot to include the point with respect to crypto, right? How easy it is for people, and legal it is for crypto forex trading, which is a completely gray area with respect to the Indian regulations, right? So all these benefits are there. This is only benefits, right? So you have to consider all the from a holistic angle. Now when you talk about, now let's come to the real estate thing. You have to be clear on your end goal. What is the purpose that you are going to invest? Is it for the rental income and capital appreciation? So you need to have the numbers very correct, right? Then is it for the visa eligibility? You want to stay in UAE, or maybe relocate to back to UAE? Is it just to avoid the US estate tax at the time of your return to India, shifting certain investments to a jurisdiction like a UAE, to avoid the US estate tax, not wanting to bring entire money? Or is it to show off to your friends and family that I have a property in UAE, right? So you have to be very clear on your end goal, and you have to do the number crunching at your end before investing, because at the end of the day, it is it is your money, right? So you have to do see, what I always advise is consult professionals. So when you consult professionals, you have to take care they are not biased. They don't have tie-ups with any real estate developers or any financial institutions. They get the money only from you, they are compensated only from you. So first of all, the challenge is to find a professional. Even from such a professional, when you take an opinion or advice, it has to be only a perspective. The real research you have to do on your own. You cannot delegate your research to some professional or someone, right? So you can get perspectives, but you have to first be clear on your end goal. Why are you investing? uh, and what you want to get out of it. That will give you clarity on the pros and cons of the investing, and arriving at a decision, right? Now liquidity risk. Now real estate, I generally don't kind of advise. I'm not an investment advisor, so I don't invest advise on investments. But per se, I don't recommend real estate as an investment because of the liquidity risk and for India the low rental yields. But always can just think, can instead of real estate, right? A lot of people push real estate. They have dedicated webinars on UAE real estate. I also get my LinkedIn in my LinkedIn feed, messages regarding this webinar they are holding on the UAE as a real estate. But is it through REITs you can get a kind of a financial exposure to UAE real estate? If at all you are looking at UAE real estate as a investment option, so can you get an exposure through REITs? Are there other financial options that are available? Because the best thing about financial options is you can liquidate easily. There's a ready market provided. That also you need to check that there should be a ready market to sell on the exchange and then move out. Suppose UAE plans to introduce any personal wealth tax or personal tax. So then when you invest financial instrument, it is easier to liquidate, move out before the new regulations kick in. For real estate being kind of illiquid kind of an asset, it takes time, especially if the property is quite costly to sell and everything, right? Okay, compare the post-tax yields. So you have to compare the post-tax yields of the UAE real estate vis-a-vis other investment avenues and other jurisdictions like Singapore, Ireland, right? So you have to compare the post-tax yields within the relevant, and then only so you have to have a strong case for investing in UAE real estate vis-a-vis the other avenues. Where does this investment fit in your asset allocation? So generally the best thing is always have an asset allocation between equity, growth assets, which is equity real estate, a fixed income, and commodity, which is gold, right? Generally, so you have to have your asset allocation. So all these points, you need to have a clarity on that. And for perspectives, get in touch with a investment advisor who can help you give you those perspectives. So this investment has to fit in. So I've seen people who have lot of investments, right, in Indian real estate, and then they are stuck. Then they cannot liquidate also. Then the tenant is also not ready to come because the maintenance cost of the property is very high. So all that thing, they get stuck. So please do your research on all these things before considering real estate as an investment option. Then tax. Now let us come to tax aspects, right? What are the tax aspects? uh, as regards UAE, as we discussed, no personal tax, no wealth tax. This may change in future. There is a corporate tax. So if you are thinking of real estate as uh, investing in real estate through a corporate entity, or maybe a foundation, you'll have to just check from a corporate tax point of view if there is any tax that applies, but there's no personal or wealth tax, right? Now let us come to US tax. Now this video that I've made is more from the perspective of returning NRIs from US who are not US citizens or green card holders, right? So when you talk about US tax, let us first discuss from on the US income tax, right? So if you're a US citizen, green card holder, resident, the rental income will be taxed at, because US tax is worldwide income. So your rental income will be taxed in US at the federal and state level. If you're a state resident, then at state level also. No FTC, as there is no tax in UAE. If there is a capital gain from the sale of the property, then it will be taxed as per US tax, 0, 15, 20% long-term capital gain. Section 121 exemption with respect to primary residence you cannot claim because it is not a primary residence. It's a rental property, right? Then there are reportings in F bar, because if you're investing in UAE, then you would have routed your investments through a maybe a UAE bank account. Then the F bar form 8938. Then if you have invested through a corporate or a trust structure, then a whole lot of those requirements, 8621, 5471, other compliances can kick in, right? I will not go into that in this video, right? So the US basically doesn't encourage US residents, US citizens to invest outside of the US. So it imposes a lot of requirements, onerous taxation in case investments are done through a company trust structure. So that you need to be mindful of if you're investing as a US resident, right? Okay, for non-resident aliens, no tax, because US doesn't tax any income for non-resident aliens unless it's a US source income or an effectively connected income. So no tax. Now, estate tax, it applies on the, so again, for US citizens or residents as per US estate law, worldwide assets, right? If you're a US citizen or a resident, as per the US estate tax law, it is on the worldwide assets, which will also include your UAE investments, right? So this video, but then the limit is very high, 13.95 million. So this video is more focused on people who are returning back, who do not qualify as US citizen or a resident, right? Because they have a very low limit of 60,000 USD, right? But so then if they die, then the US estate tax applies only on the US assets, right? I have made separate video on the estate tax and strategies regarding estate tax, so you can watch that separate video to get more clarity. Now let us come to India tax. Now till RNOR, there is no tax on the rental income or the capital gains from that property. Just ensure that the sale proceeds or the rental income does not get credited into a Indian bank account during the RNOR, because if that is done, then there is a provision, section 5, which says that the income can be credited irrespective of the residential status. After ROR, India will tax it as per the Indian tax law provisions, right? The UAE property also as per the what are the provisions regarding taxation of the income from house property. So India will tax it. Now rental income or capital gains computed tax as per the India tax law provisions, right? Then section 54 exemption. If you want to, so if you sell an Indian property and if you're looking at getting a section 54 exemption on that property by buying a property in UAE, that will not be available because the provisions state that the new property should be an Indian property only. So that you need to just keep in mind. Now, disclosures, very, very important. Says schedule FSI, FA disclosures need to be made very clearly and very carefully after ROR. This is given the Indian government's increased scrutiny on Indian residents buying property in UAE, right? So you need to be very careful. After ROR, these disclosures are very clearly made, right? No question of FTC because UAE anyways doesn't tax, have a personal tax, income tax. No estate tax in India, right? So okay, now from an India tax perspective, there are like a couple of strategies where that can be implemented, whereby like a person who returns back to India can extend his RNOR status by spending some days uh, in UAE if the house is not let out. So those strategies can be deployed. There are, I mean, minimal, not very much benefits, like through extending of the RNOR status, maybe the incomes that are there in the FCNR or the RF in the RFC accounts, they are tax free till RNOR. So that advantage is there. So but then you have to think from all angles. If you have a family, if you have a child who is going to school, then all these strategies will not work out, right? So that is one strategy. Second is some people can think of such a strategy that they have foreign income, foreign assets, which after ROR there's a huge significant capital gain that can get generated. They may move to UAE for that particular year, live in UAE, and be a non-resident for Indian tax purposes, and then this can allow that the income doesn't get taxed in India. However, beware of general anti-avoidance regulations in India. GAR provisions are there, whereby now these provisions are not yet kind of triggered or by the income tax department for individuals, right? So, but then there is a risk nonetheless that these transactions can constitute kind of impermissible avoidance arrangement, that the sole purpose of this transaction was to avoid the Indian capital gain, right? So there are specific anti-avoidance provisions with respect to like clubbing and all. If you transfer income to your wife or minor child, it will be clubbed back. Those provisions are there. These are general anti-avoidance provisions which even ignore the DTA. If India in UAE DTA you take kind of want to take a benefit, this will even kind of override that. So just take precaution. And maybe I don't know if you are a person who has a UAE property and you are doing these significant capital gains transactions, you will have your CAs and lawyers who can adequately guide you on these risks and represent you in case the need arises. So that kind of backup has to be there, right? If you want to take that risk, that tax litigation risk is there. Now, compliance is if you become an Indian resident, right? If you become an Indian resident as per FEMA, which is kind of the date of your return to India, and then you remit the funds from Indian bank account, right? Then the whole thing about the it then qualifies as a Under the LRS scheme, you can only remit, which restricts per year you can only remit up to 2,50,000 USD. Then there is a TCS at 20% above 10 lakhs that now starts that becomes applicable. Then if you transact through the NRO account, that is a violation, because after becoming a resident, you can only transact through a resident account. The right strategy is that all these thing should be done from transferring the money from the US bank account directly to the UAE, right? Do not bring the money to India and then route it, right? Because of the complications, better to transfer. Now, under section 6(4) of FEMA, a, a person who was non-resident and who has earned the money lying in the US, he can do anything with that money without any question under the FEMA, right? So that person can, maybe if he has 500 rupees, and he can move 100 rupees out of that 500 rupees to UAE, no questions asked, and there is no requirement to remit the income, rental income, or the sales proceeds of those funds back to India. However, if you remit under the LRS route, if you remit under the LRS route, then there is a clear restriction whereby if you like get a rental income or a sale proceeds of the flat, if you sell the flat, you cannot keep it idle. You have to either reinvest it or then bring back to India within 180 days. So you need to be careful in your planning with respect to that this investment. Now, please understand, Indian government seems to be paranoid with respect to Indian residents having UAE, not UAE, any foreign investments, right? So they have given this last year they have given additional time for Indian residents to report their foreign transactions in Schedule FSI, FA, and they have now all the information. There is now the 20% TCS that is also applicable. On top of that, they are tracking the outward remittances. So there's some paranoid focus of the Indian government, because there may be kind of large scale tax evasions in this. So you need to be very careful with respect to this thing, and ensuring the documentations and the compliances are proper. Property management, now, very important for any uh, investment in a property transaction where you are not personally able to supervise. How easy it is there from the US if you're investing from the US, or from India if you're living in India. If there is a rental dispute, right, the with the kind of tenant, how it will be redressed, what are the laws applicable, so all that maybe a good lawyer can guide you on those points. Now, risk of changes in the UAE tax rules, that is a risk that we've discussed. And now, investing in personal name versus company name. Now, if you invest, so generally in US, if you have a rental property, you prefer to invest uh, through a LLC structure, which gives you a limited liability protection plus privacy also. Similar thing is there for UAE property also, that maybe you can invest through the company name, right, to get these protections. Again, so one is the limited liability protection. Second is the avoiding US estate tax. Again, this is uh, not relevant that much because it is for USC or residents who are taxed on world assets, but then they have a very high limit, so that's not very relevant here. But if you are an Indian resident who wants limited liability protection, then you can opt for this. But then investing in company name, it involves all the respective compliances with respect to company setup or trust setup or a foundation setup, so that needs to be checked. Costs, land department fee, there is a land department fee that needs to be paid, commission to agent who is brokering this deal for you. If you are investing through company or foundation type setup, then the setup fees and ongoing maintenance fees. Property management agencies, their fee. Cost of living in the UAE, if you plan to relocate to UAE, because UAE is a very high cost of living country, so that costs all need to be factored in. TRC requirements. So if you plan to relocate back to UAE and you have India investments or US investments and you want to claim the benefits under the respective DTAs, then there is a requirement for you to get a TRC, tax residency certificate, in UAE, and that you'll need to furnish to the Indian financial institutions. So for getting the TRC, there are certain stay requirements and all. So you need to be careful about ensuring those requirements. Succession issues. If suppose you have a property and you die, so under the UAE law, there is a Sharia law that is applicable, right? According the property distribution is according to the Sharia law. However, the free zones, right, DFIFC free zones, uh, in those free zones, the common law is applicable. So, but then there is also a requirement to have a will, then only that will apply. So you need to have a will for your real estate, and you need to check with your friends who have invested, how easy is it that if I die, how my family member, my spouse, can get the property transferred in her name and then repatriate the proceeds. How does it actually work? How easy is that process? For example, if you are in India and you have some assets back in the US, there is a very complicated uh, kind of a process, the estate tax closure and getting the closing letter, which can take even up to 2 years. So how is the process in UAE? So you need to check that. Currency risk. Now, since the if you think that my money is safe uh, being in USD, then I think there is not much of a currency risk. But from a general rule of financial planning, if you plan to retire back in India, and if you have like spending 100 rupees in India, then ideally 75 out of the total 100 should be in INR, and 25 rupees can be in USD, from a diversification perspective. So to that extent, you need to also see that is there a kind of a currency risk if in my overall portfolio, which consists of the UAE real estate, my entire portfolio has maybe 75% UAE USD and only 25% 25 rupees India exposure. So what will be the currency risk that you need to also keep in mind? Banking facilities in UAE, you need to check, because what I have heard is sometimes it becomes very difficult to get a UAE bank account. So is the bank account, UAE bank account, easy? Because you would want to take the credit of the rental income or the sales proceeds if you want to sell uh, within a UAE bank account first, and then remit to India, and not directly remit back to India. So, and especially during the RNOR phase. So you need to check on that. Okay, then I think this is the last point, that never ask a barber, Sir Warren Buffett's advice, whether you need a haircut. So, all these questions and the discussions that you need to have is, please don't ask them with people who have a vested interest in uh, selling you the UA property, right? Vested interest in getting that transaction done, right? The brokers and the people. Even when you talk about professionals, there are professionals who are not very scrupulous. They have ties with these providers, right? They have the inherent, they get a cut from these, which is not allowed as per the professional ethics rules and regulations, but they still do those things, right? So you need to find independent professionals in UAE, in UAE. And why I'm saying in UAE is that people who are there in UAE can give the best advice, right? Not someone who is in India or somewhere else, who have their feet on the ground, who are independent, who are reputed, can give you the right advice. So you need to find those professionals. Um, when you have agencies, any agencies or any brokers, if you have transactions, I have seen cases where, especially in the business cases, uh, uh, business setup, those agencies who help in business setups, they have like very onerous conditions and in the terms and conditions, which then require you to be locked in with them, even if their service is not good. So any terms and conditions, even for builder property, you need to check the TNC thoroughly, either yourself or get help of a professional. But he or she should be independent and not tied up, so you can understand it from their language, how they talk, right? You can very clearly decipher, if they are kind of nudging you towards a particular project or something, then you can get it very clearly. Now ask in NRI communities, if other people who have had this experience, you would want to have kind of experience of others who have gone through this route, what was their experience. Like kind of there are people who have rental income properties, and the tenants who were not ready to vacate and all those problems. So ask in those communities. In Reddit, they have communities for dedicated for NRIs. You can check that, or other forums also. And best, what I will advise you is, if real estate is what you're looking at, it's always best to have your feet on the ground in UAE, in Dubai, right? Wherever you are planning to buy the property, to actually be on the ground and do the purchase. Unlike a financial transaction where you can still do it, but for real estate and all these things, you should have the feet on ground. So I think this is it. These are some of my pointers. I hope they were useful. I will request anyone returning from US, or anyone, maybe an Indian resident also, who have done these UAE property transactions, can share their experience for the benefit of the wider community in the comment section. If you have any questions, do share. Thank you so much for watching this video. Thank you so much.